Hello, investors. This is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Thursday, August 1st, 4:37 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. So, well, let's get into it. Market state, we are in a correction. The trend gauge, market leaders, bearish downtrend. We came into today owning zero names and came out owning zero individual names as well. Market leaders are definitely in a correction if you look at names like NVIDIA breaking the 100-day or heading towards the 100-day. SMCI at the 200-day, ELF, ANF, ARM, AMD, all of these names have corrected significantly and quote unquote collapsing. Short term, today, after yesterday getting back above the 8 and 21, we're back below on the Qs in S&P. Small and mid caps also saw a failed breakout and swift reversal and follow through to the downside, but we did hold the 21 EMA. So that is still not in a bearish red arrow. We have that in a yellow neutral zone. Medium term, 50-day. Qs are below, so we have that red. S&P closed just below, but still above those recent lows. So we have that at yellow, and then we still have that's the small and mid caps with a bullish uptrend. And finally, long-term trend, we're still above the 200-day moving average for all major indexes. So what happened today? FOMC bull trap. Did the second leg down just start? So yesterday, we had the Fed hold their Fed fund rates at between 5.25 to 5.5%. And the markets initially had a very strong reaction, but ended up reversing some of the gains off the highs. However, we did close above the 8 and 21 EMA on the S&P, started looking like we're going to get a rally in the NASDAQ. And then small and mid cap saw great strength, but closed quite muted yesterday. Today, well, we'll get into the charts later and I'll show exactly what happened, but let's go over the numbers first and then we'll get into the details. So what happened? 21 over 21 list down 2.11%, 2 up, 2 neutral, 17 down. So wide selling today. Big 8 down 1.62%, RGA down 2.98%, S&P down 1.37%, equal weighted down 1.08%, Qs down 2.4%, equal weighted down 2.36%, Dow down 1.42%, mid caps down 1.93%, small caps down 3.22%, global 640 down 0.96%, because bonds are actually green today. Some are floating around the idea of a hard landing and recessionary fears now, and we'll get into why that's the case later in this video. And finally, GROW down about 1.03%. So we did outperform that in pretty much major indexes today, but still, nevertheless, a down day. So heading into some charts real quick, starting off with the S&P as usual. This is what we call a key reversal day, or outside reversal, or a bearish engulfing. We made a new high relative to yesterday's high, reversed all of it, and engulfed yesterday's low. And we closed right at the 50, arguably pretty much right flat at the 50, but it was on high volume, signaling further distribution. As we've been talking about in the videos, we've had multiple distribution days here within a 2 to 3 week time frame. Usually that signals watch out for a correction, and maybe we get the second leg here. We do have this volatile, expanding bear flag type setup here. Qs rejected the 50-day and the 8 EMA, then undercut or broke down below the 21 and closed near the lows of this range. These are some key levels here. Again, on huge volume. As you can see, you have some red skyscrapers, and that's exactly what you do not want to see if you are a bull. The Dow couldn't make new highs and came back into the 21 EMA. This still is acting fine. As you can see, the RS line is still trending higher, but a distribution day, definitely not a good sign. Mid caps made new highs yesterday, squatted, closed near the lows of the day, a huge follow through to the downside, closing right above the 21 EMA. Russell, same thing, made new highs, closed at the lows of the day yesterday, and huge downside follow through, closing right above the 21 EMA. So the VIX spiked on this volatility up to 18.59. Dollar bouncing into the 200. Gold looking like another reversal, potential failed breakout once again. Gold miners, outside reversal. Silver, back to the lows end of the base, and pretty much just bear flagging here. Looking like it's going to retest this 25 level again. Bitcoin, outside reversal this day. There's a key theme here that when you get these outside reversals, when it makes a new high relative to the previous day high and closes below or undercuts previous day lows, essentially engulfing the previous day candle, it tends to lead to lower moves, like we've seen in Bitcoin here too. Bonds trending higher as people are seeing that as a flight to safety, same with TLT, and then yields are down because people are buying up bonds, and yields are usually or always inverse that of bonds. All right, so I'm gonna head over to TradingView real quick to compare contrast the Big 8 index. We tried to pop above the 821 EMA and 50, reversed it, closed at the lows. Still holding the 20-week moving average though. And then huge failure in our RGA index. We tried breaking out yesterday, now fall through to the downside. This just means, oh, maybe the rotation to small mid caps will not be happening yet. And this definitely will need a lot more time. And then we quickly take a look at yields, completely sank. The 1 year and 2 year are often a barometer or gauge of the Fed funds rate, and that is tanking. The 10-year sinking as well, with bonds being bid up, is an indicator that growth and inflation is definitely coming down, but now the narrative might shift to recession, which is also bad for the markets. This is a very tricky market balancing the narratives, and you can see that with this volatility. One thing I want to add, there was a piece of data that I saw that yesterday was the biggest day of the year, and today is either the first or second biggest down day of the year. And volatility is the absolute enemy of a trend follower or a trader that is looking for low risk entry points. Bitcoin, also an outside day reversal. Remember the outside day that I talked about? Sank so far, found support at the 50 and looking to put in a hammer. So that would be definitely constructive if we can get that. And then one more thing, go to the S&P chart. There's a perception that maybe the market's starting to price in that the Fed has been late again, late at the wheel, asleep at the wheel, just like they were late to hike rates and to turn off quantitative easing when inflation came on. Now some people are starting to think that maybe the Fed is too late to cut rates. And Don actually made this great tweet, and he says, 2018 quarter four, the last time the market perceived a policy mistake by the Fed, it resulted in a 20% drop in the S&P. Of course, Don is not making predictions that this is happening, but it's just using this precedent as a potential, just a potential scenario that could play out if we start falling to recessionary fears. And he makes a really important point. Making money in the market and keeping money in the market are two different skills. And he says, got stops. And so here at Revere, we talk about it every video. We have a plan for all outcomes. We're flexible to the upside and downside. And our number one job is a risk manager. So we're here to protect assets, especially during corrections. And then we have rules to get us back engaged when the market goes into the uptrend to participate, to continue compounding. Just remember that the more you lose and losses work geometrically against you, so that ruins your compounding once you enter a healthy period. And when we protect your assets, you're able to compound from a higher base. And please email me, text me on Twitter, DM me on Twitter if you have any questions about that. All right, so onto the tail of the tape. Market staying in correction, huge VIX spike. We're in a bear case right now since we're below the 21 EMA and even the 50-day. News today, we had Apple earnings. They beat on earnings and they also beat on revenues. Just a beast of a company. Q2 EPS came in at 1.4, consensus 1.35. Q2 revenues came in at 85.8 billion, consensus 84.53 billion. iPhone revenues came in a little bit weaker or softer than expected, 39.3 billion versus 39.7 billion. Mac revenues were higher than than last year. Same with iPad as well. Wearables, home and accessory sales were lower than last year, and then services revenue was much higher than last year, 24.21 billion versus 21.21 billion. Next, Amazon, they beat on they also beat on earnings, but they missed on revenues. Their Q2 AWS net sales came in at 26.28 billion versus 22.14 billion. AWS is the prime arm of Amazon in terms of generating revenues and substantial operating profits that trickle down into net income. So we went from up one to down one. Volatility is huge. Day one below the 8 EMA. Day one below the 21 EMA as well. Action, we opened green and then just pure relentless selling after 10 a.m. And what happened at 10 a.m.? It was the ISM and S&P manufacturing indexes, and it showed a huge softening, which means that the economy is decelerating and the markets start to fear a recession. Tomorrow we have non-farm payrolls and job reports from the government, and that could give us another great picture of how the economy is doing. And as Powell said in FOMC, the dual mandate of the Fed is price stability and maximum employment. And because we've seen inflation pull back, we've seen that disinflation. Now the Fed is balancing both risks: price stability, not allowing inflation to come back up, and maximum employment. So if inflation falls too quickly and actually turns into deflation, that is terrible for the economy. People lose jobs, and that is the purpose of the Federal Reserve. Strong sectors, bond prices were up, dollar is up, therefore bond yields were down. Staples, utilities, healthcare, and real estate were up today. Banks, oils, industrials, tech, and consumer discretionary down. Semis down, software down, home builders down. Today, we lowered exposure significantly down to 0.52 beta. We sold UWM, FAS, IBIT, DFEN, RSP. The only things we own now is some UPRO and SPLG to maintain some exposure in the S&P 500. Some key levels we're watching: S&P versus the 21 EMA and 50-day, Qs versus 21 EMA and 50-day, and we're looking to see how the small and mid caps hold up. Bottom line is FOMC bull trap. Question, did the second leg just start? So now we will go to some charts of interest. Let's see the three stocks that were up in our 21 over 21 list. ISRGs in that healthcare space. This looks extremely good. Actually broke this 450 era and this downtrend line on volume too. Great action in the face of this weak tape. SFM, Sprouts Farmers Market, gapped up on earnings and continues its drift. And then GLW, it was up today, but this shouldn't be on here actually. That's fine. This completely collapsed. This was on the 21 over 21 coming into this week, but completely collapsed so far. It is up today, but just not strong action at all. Let's look at some of the biggest down moves. Generac, wow. Broke out, squatted, closed low of the day. And that was on earnings. And now reversed it and closed at the 50-day moving average. This volatility, look at this megaphone. That is not what you want to see as a trend follower. We want to see volatility contraction, then breakout, not volatility expansion like that. LNTH, got pummeled on earnings as well. Look at this volatility expansion. Coin just had earnings after the bell. Um, they saw they're actually doing very well as a company. Saw subscriptions increase, custodial revenues increase. Um, they did see transaction payments decrease as people are buying less crypto since it's a little weaker market than the previous quarter, but still doing really well. Revenues are growing in this business, and this is a huge base that I'm really into. Just waiting to see how it resolves itself over time, and this could be a really nice breakout eventually. RK was down a lot as well, broke this bear flag, now below all key moving averages. Definitely not a good gauge for growth. I mean, at this point, I don't even know if RK is that good of a gauge for growth. Essentially, has done nothing for the past 2 years. IoT, let's see, holding this handle, so that is definitely showing some RS. Palantir came down as well, but I would say that's still relatively strong. Um, Starting to look more like a bear flag, and it seems like this 25 level in this 50-day might be up soon. KKR, the biggest private equity group, capped up on earnings and faded so far. So the evidence is everywhere that strength is not working right now. Strength is being faded. There's a lot of volatility around breakout levels, a lot of pivot failures, and a lot of base failures. IBIT, it is down today, but I'm still very positive on this name or this crypto. We have this volatility contraction here, as I talked about, and I post on my Twitter. Let's go to this chart here. It was 3 weeks off the bottom. Usually, I've never seen anything act that well or break out after 3 weeks off a low. So this sideways action is completely normal here. And so we'll see how that develops. Um, Definitely, there's regulatory favorability coming to crypto. So definitely a great space to be in. Let's just quickly go over some leaders. NVIDIA, of course, is the market leader. Rejected the 50-day, back below the 8 and 21. When you have the number one leader showing just mass distribution like this, it's definitely not good for the markets. SMCI put in the top in March and just really has just been making lower highs and lower lows. And we're back to the 200-day. And this was one of the main leaders. And when you see leaders start collapsing like this, it's never a good sign for the markets. RS line just in a downtrend. This is what I call porcupine, or from David Ryan, the porcupine characteristics: reversal, 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 reversal. So just like a porcupine, a lot of spikes. And you never really want to be in a name like that can quickly reverse on you. ELF tried breaking out here, failed, and from failed moves comes fast moves. Back to the 200-day. ANF was a leader too. Had this huge move on earnings and just slowly drifting lower, back below the 821 and 50. RS line has rolled over. As you can see, not good at all. RS line is below the fast and the slow MA. So that is definitely a big sell. And we are also closing below the 20-week, which is also the 100-day on the daily, which I do not have up here. So just one more thing actually that came up on my mind about from failed moves comes fast moves. On the 5-minute, we broke out here, failed, and quickly made a swift move down. So today's takeaway: from failed moves comes fast moves. Watch out when you have key reversal days, bear or other, also known as bearish engulfing days. The market narrative, as we've been talking about on some daily videos, weekend videos, and podcasts, we went from this inflationary narrative, from fear and inflation, to seeing inflation come down. So the market was getting positive that the Fed will cut rates. But now we're starting to get some signs that the economy is slowing down and slowing down quickly, and people are starting to fear a recession. So we'll have to see what the Fed does in the September FOMC, as well as what the market does. And as always, the tape tells all, and we'll be watching the charts, managing risk, finding asymmetrical bets, and finding our places to get back into the markets when it is time. And that time is not now, as I'm speaking. So back to this page. That's going to wrap it. As always, we would like to hear from you. My email is ted@revereasset.com. You can also reach out to Dan and Don at revereasset.com. Phone is 855-REAL-WEALTH. That's 855-732-5932. Our website is revereasset.com. I mean, I said this before, we named our flagship portfolio GROTECTION. And what that means is we want to participate when the market is in an uptrend and protect money in downtrends. And this is where we get to work protecting money. And that is exactly what we have done. If you're interested in becoming a client, please reach out to me, to Dan, to Don. And with that said, I'll wrap up today's video. This is Ted Zhang with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.